In this video, I'm about to reveal the 7 most profitable LuxAlgo TradingView indicators that you need to know for 2025. If you want to stay ahead of the game and maximize your profits, these indicators are game changers. Whether you're into stocks, crypto, or Forex, these tools are designed to help you make informed decisions with precision. What's even better is that we're pulling these built-in indicators from 2 of LuxAlgo's premium toolkits, signals and overlays, and price action concepts. You can test them out for yourself with my special link in the description and try them risk-free for 30 days. Stick around until the end, and I guarantee you won't want to miss what comes in at number 1. Spoiler alert, it's going to blow your mind. So let's kick things off with indicator number 7 on our list, the auto take profit and stop loss levels. This tool is a crucial part of the signals and overlays indicator. The take profit and stop loss levels feature is an excellent tool for managing your risk and maximizing your profits. It works by automatically displaying up to 4 potential take profit and stop loss levels on your chart. These levels are estimated based on key support and resistance zones using a user-selected condition. This feature helps you eliminate the guesswork, allowing you to focus on your trading strategy while letting the indicator handle your exits. One of the best things about this tool is how customizable it is. You can choose from various methods for calculating these levels, depending on your trading style. For example, you can select signals, which calculates new levels whenever a bullish or bearish confirmation signal is detected. Alternatively, you can use methods like smart trail, reversal zones, or even create custom alerts that adjust these levels based on conditions you define. These options give you flexibility in adapting the tool to fit your market view. You can also adjust the distance between the price and the take profit and stop loss levels using the distance setting. For instance, if you're trading highly volatile assets, setting a larger distance between levels will allow you to capture more significant price movements. On the flip side, if you're trading assets with smaller price swings, setting a tighter distance may be more effective for short-term gains. Now, let's walk through an example to see how this works in practice. For instance, you've selected the signals option. When a new bullish confirmation signal appears, it places 2 take profit levels above the current price, each corresponding to potential areas of resistance. At the same time, it places stop loss levels below the current price, indicating support areas to minimize your risk. Let's say you enter the trade when the buy signal confirms. Your first take profit level might be reached after a quick move upward, allowing you to lock in gains while trailing the remaining levels higher. Meanwhile, your stop loss levels will protect your downside in case the market reverses unexpectedly. You can continue riding the trend with confidence, knowing your exit points are set automatically. Next, let's talk about indicator number 6, the premium and discount zones from LuxAlgo's price action concepts. The premium and discount zones feature from LuxAlgo's price action concepts is an essential tool for understanding where the price currently sits relative to its overall market value. It divides the price into 3 key areas: the premium zone, the discount zone, and the equilibrium zone. These zones provide insight into whether an asset is overbought in the premium zone, oversold in the discount zone, or fairly valued in the equilibrium zone. This tool helps traders identify high-probability setups by signaling potential reversals or continuation patterns based on price action within these zones. For example, if the price moves into the discount zone during an uptrend, it has a higher likelihood of reversing upward. Similarly, in a downtrend, when the price enters the premium zone, it may indicate an upcoming reversal downward. By using these zones as dynamic support and resistance levels, you can make more informed decisions about entering or exiting trades. Let's walk through an example of how you can use the premium and discount zones for a sell trade. Imagine the market is trending downward and the price starts to approach the premium zone, which indicates that the asset is trading at a premium and may be overbought. overbought. In this scenario, you'd be looking for bearish signals to confirm that a reversal is likely to happen. As the price hits the premium zone, you notice it struggling to break through this resistance level, signaling a potential reversal. At this point, you enter a short or sell position, expecting the price to reverse and head lower. The premium zone serves as your resistance level, and you place your stop loss just above it to manage your risk. As the price starts to move downward, you can take profits at key points, like when the price reaches the equilibrium zone or if it continues down into the discount zone. The Premium and Discount Zones tool has now helped you enter a high-probability sell trade using market structure and price positioning to confirm the trend. Now, on to number 5, a powerhouse feature that can significantly improve your trailing stop strategy. Smart Trail from LuxAlgo's signals and overlays. The Smart Trail feature from LuxAlgo is an advanced trailing stop mechanism that adjusts based on market conditions. Unlike a standard trailing stop that follows price movements at a fixed distance, Smart Trail adapts to unwanted price variations, making it ideal for catching trends while minimizing noise. Smart Trail shows support areas in blue and resistance areas in red, helping traders not only set trailing stop losses but also anticipate potential reversals. Imagine you're in an uptrend with the price moving above the Smart Trail. As the price continues upward, the Smart Trail dynamically adjusts, acting as a trailing stop loss to lock in profits. As the trade progresses, you monitor the price action. If the price begins to reverse and crosses below the Smart Trail, that's your signal to exit the trade. The Smart Trail has protected your gains by adapting to the price action and ensuring that you don't exit prematurely while still giving you a safety net. Now, let's look at a sell trade example. In a downtrend, the price is below the Smart Trail, indicating a bearish move. You enter a short or sell position, confident that the Smart Trail will act as your trailing stop loss, adjusting as the price drops further. As the trade continues, the Smart Trail follows the price downward. You watch for the price to retrace and cross over the Smart Trail. Once that happens, it's your cue to exit the trade, ensuring that you've captured as much of the downtrend as possible while minimizing risk. Let's move on to indicator number 4, the trend lines from price action concepts. The trend lines feature automatically identifies and displays trend lines based on market liquidity. These trend lines are constructed by identifying zones where significant liquidity has been found by market participants, showing support areas in blue during uptrends and resistance areas in red during downtrends. Once the price breaks through one of these key levels, it often signals a potential trend reversal, giving traders an early warning of changing market conditions. This tool also offers the option to customize how many historical trend lines are displayed on your chart, allowing you to avoid clutter and focus on the most relevant levels. Additionally, built-in alerts notify you when a trend line is broken, helping you stay on top of the action without constantly monitoring your charts. In this example, we're looking at a bullish trend line that has been broken by the price moving downward. Once the price breaks below the trend line, this can be a strong signal that the uptrend is ending and a downtrend might be forming. At this point, you could consider entering a sell trade, taking advantage of the potential reversal. However, it's important to remember that breaking a trend line alone shouldn't be the only reason to enter a trade. As shown in this example, the trend line was broken, and that might seem like the perfect time to enter a sell position. But relying solely on a trend line break can lead to false signals. It's crucial to combine this information with other indicators or confirmations to make more informed trading decisions. Alright, we're getting closer to the top. Coming in at number 3, we have reversal bands, another powerful tool from signals and overlays. The reversal bands feature is a powerful tool for identifying potential tops and bottoms in both ranging and trending markets. When activated, the indicator displays an upper and lower zone on your chart, each designed to highlight areas where price is likely to reverse. These zones are particularly effective in ranging markets, where the price tends to move between established boundaries, but they can also offer valuable insights during trends. Customization options are available to control how far the displayed reversal zones are from the current price. A higher value makes the zones less prone to being broken, offering more conservative signals, while lower values will show zones closer to the price, potentially offering more aggressive opportunities. A highly effective trading strategy using the reversal bands involves combining a bounce off one of the bands with a change of character label and a confirmation signal, which could be a buy or sell signal depending on the trade direction. This combination allows you to enter the trade with greater confidence using multiple layers of confirmation. For instance, if the price bounces off the lower reversal band and a change of character label appears, combined with a bullish confirmation signal, that could indicate a strong buying opportunity. We could then use the exit signals feature to take partial profits as the price moves in our favor. Conversely, if the price touches the upper reversal band and the change of character label appears, combined with a bearish confirmation signal, that could be an excellent signal to enter a sell trade. As the price moves downward, we could have exited the trade using the same exit signals feature to lock in gains. Now, we're on to indicator number 2, and it's a real game changer. AI buy and sell signals combined with exit signals from the signals and overlays indicator. The buy and sell signals, also called confirmation signals, are designed to help traders make better decisions by providing clear entry and exit points for trades. These signals are based on market trends, helping you confirm when it might be a good time to buy or sell. The signals come in 2 types: normal signals and strong signals. Strong signals are more reliable because they align with the overall market trend, while normal signals can sometimes indicate smaller movements, like retracements. You can adjust how sensitive these signals are based on your trading style. For example, if you're a scalper, meaning you prefer short, quick trades, you might want to manually adjust the signal sensitivity or use the short-term autopilot sensitivity to get more signals in a shorter time frame. On the other hand, if you're a day trader or swing trader who holds trades for a longer period, you'd likely use the mid-term or long-term autopilot sensitivity. This way, you can fine-tune the signals to suit how fast or slow you want them to react to market changes. For those who want to dig deeper into the signals, you can enable the AI Signal Classifier. When this option is on, instead of just seeing the regular buy and sell arrows, you'll see numbers ranging from 1 to 4. These numbers represent the strength of the signals. Lower numbers, like 1 or 2, suggest the signal might indicate a potential reversal or a small change, while higher numbers, like 3 or 4, indicate a stronger trend that's more likely to continue. When I started trading based on LuxAlgo indicators, I found the buy and sell signals incredibly helpful. At first, I focused on using them with higher time frames and longer-term sensitivity. For example, when trading Bitcoin, I like to set the sensitivity value above 23. I've found it worked very well for me in becoming profitable in the long haul. Once I saw how effective it was, I started integrating other built-in toolkits to further enhance my strategy. Finally, we've arrived at indicator number 1, the holy grail of price action, volumetric order blocks from price action concepts. The volumetric order blocks indicator is a revolutionary tool that gives traders a deeper look at institutional buying and selling. These order blocks highlight price areas where large, informed market participants are placing their orders, offering potential areas of support and resistance. Bullish volumetric order blocks form near swing lows, providing possible support levels, while bearish volumetric order blocks form near swing highs, acting as resistance zones. These zones automatically adjust and disappear once the price breaks through them, which is known as mitigation. This tool also provides volumetric data showing how much market activity is concentrated in these blocks. The more volume in a block, the stronger its impact on price movement. This information gives traders a clear indication of where the smart money is taking action, making it easier to trade alongside institutional players. One of the key customization options available with volumetric order blocks is the ability to adjust the length setting. This setting controls the look-back period used to detect swing points. By increasing the length value from the default setting of 5 to a higher value like 10, you can focus on longer-term price movements and more significant market levels. This is particularly useful for identifying more stable and reliable order blocks. Additionally, the indicator allows you to display volumetric order blocks from higher time frames while trading on lower time frames. For example, if you're trading on the 5-minute chart, you can use order blocks generated from the 1-hour time frame. This gives you a broader market perspective and allows you to integrate higher time frame analysis into your shorter-term trading strategy. By combining these multiple perspectives, you can increase the accuracy of your trades and make better informed decisions. Another powerful feature of the volumetric order blocks is the breaker blocks option. When an order block gets mitigated, meaning the price breaks through it, the block transforms into a breaker block. These zones can be revisited by the price later and serve as potential new support or resistance areas. For instance, let's say a bullish volumetric order block is broken, turning it into a breaker block. Later, the price might return to this zone where it could act as support. Traders can use these revisits to the breaker block as potential entry points, allowing them to take advantage of a previously mitigated zone for a new trade setup. The breaker blocks feature is easy to enable through the indicator settings, and these zones are shown with a non-solid background to differentiate them from active volumetric order blocks. Whether you're just starting or already an experienced trader, these tools offer the edge you need to navigate today's fast-paced markets. But here's a pro tip. While each of these indicators is powerful on its own, the real magic happens when you combine 2 or even 3 of them to create a unique custom trading strategy. By leveraging the strengths of multiple toolkits, you can enhance your analysis, reduce risk, and increase profitability. And if you're ready to take your trading to the next level, click the link in the description to try LuxAlgo's premium indicators 30 days risk-free. Happy trading!